The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we work through the midweek trade on Wednesday, grains and oilseeds did find a little more support. It was a tough day, though, across the cattle futures with limit losses in both fats and feeders. More rumors about the U.S.-Mexico border seemingly at play. A lot to unpack here and talk about. Let's do that with Mike Zuzolo from Global Commodity Analytics. Mike, good to catch up with you again this week. And what a tale of two different markets. Grains, a little positivity, cattle. I don't know if anyone wants to look at that market on Wednesday.
No, and it's getting tough, and that's all there is to it because this is the kind of the end of the peak of the spring calf sales, and lots of heifers being sold here in the next week or two.
Yeah, very true. Well, we're going to get into cattle here in a little bit. Let's start with the positivity on Wednesday. Let's talk to grains and oilseeds. More support in soybeans, kind of the upside leader on the session. You know, we've been saying that a lot here in last several days. Beans have been the leader to the upside here. But something that I think we could start with, and I'll pull up one of your charts. You know, you look at U.S. prices versus Brazilian prices now, and we're not as competitive as we were several weeks ago. And I mean, that's maybe a bit of a double-edged sword here. It's a good news for our producers, but also maybe bad news to some degree.
Yeah, I think you hit on the nose. You've got a situation here, Jesse, where you want to let the market run because we're still in corn, beans, and wheat well below our 3-year average price. And so we want this post-harvest rally to really continue on through. But because the noise levels are increasing, I mean, we've even got the Supreme Court now starting to get involved in the potential price action because of the tariff decision that they may or may not make by the end of this year. But you've got so much noise, and those noise levels are getting so high. I think you've got to pick out a couple, 3 really key barometers and leading indicators. And this one is one of the keys, is what led this market higher and what made the soybean market look real to the upside, even in the midst of fast Brazilian planting, was the Pacific Northwest prices. And then the Gulf prices started to really climb pretty rapidly. And that was an indication that somebody was coming in and buying, or that somebody was expected to buy, and we were loading a lot up on the ports. And I think this is where what we got in terms of Wednesday morning, early Wednesday morning news from China, got our first solid piece of news that they were cutting their trade barriers, but they kept a 13% tariff on U.S. soybeans. And that puts you in a situation where a $12 bean price, which is what you're essentially looking at here on the Gulf bean price in orange, that puts you all the way up above $13.50 if you add another 13% on top of it. So our leading indicators are going to be wheat, crude oil, dollar, and beans. And that's very, very solid as far as what we've been looking at for the past several months. This first leading indicator is for the first time looking a bit shaky. And I would also throw out that I'm hearing, and I'm sure you probably heard this as well, that China may be calling Brazil for some December delivery. That would be really negative in this market, I think, because this past Saturday, the White House put out some specifics on what's happening with the trade deal, and they went to calendar year. I thought they were doing marketing year, and if you look at last week's comments, the video that we did, I was using a marketing year mindset, but White House numbers said 6 million tons in November, 6 million tons in December, and then 25 million tons for 2026 calendar year. So the clock is ticking. We'd better be getting 6 million tons on the books here because we're getting into the second week of November after this week.
Well, we shift over to the wheat complex, and this is something I want to look at the crude and wheat correlation here. And you and I have talked so many times about wheat's need to be the leader. And I'd say wheat, again, getting the most support from soybeans right now, Mike. And we've seen a decent, jump up here in some of these futures. Also, some rumor that China might be in the market for some U.S. wheat, and maybe that's percolating a little bit here as well. What are you seeing across the wheat complex right now, Mike?
Yeah, this is where you want to take advantage of the wheat rally because it's providing a lot of support and it's being let out of the gate. You can tell we're getting back to levels not seen since the harvest or pre-harvest highs last year, midsummer, June, late June, early July. So let the market go. But by the same token, it's not being supported by the crude oil. It's not being supported by the dollar. And what that suggests is exactly what you said, is you've got another fundamental underneath you that's called China, maybe buying U.S. wheat. So let the market get the premium, the China premium in, but also go on a little bit more of a defensive posture here as we get up another 15, 20 cents. Because now you've got two indicators that are not jiving. The Pacific Northwest soybean price has gone from $12.10 on Tuesday to back below $12 on Wednesday. May mean nothing, but we need to watch it. The U.S. bean price at the Gulf has gone below Brazil. May mean nothing, but we've got to watch it. Same with this chart, is we've got a divergence now and only about a 40%, 39% positive relationship between the crude and between the soft red wheat on a 5-week basis. We had been running closer to 70, almost 80% in the past couple weeks we've been talking about it.
Looking as well at the U.S. dollar index here, and I think this is important to rope this into the grain conversation overall here, with the dollar getting back to what I believe fresh 5-month highs on Wednesday, Mike. And so this in itself also aids to, the U.S. Picture here not being as competitive, I guess I would say, on the global grain front. Your thoughts on that?
Yeah, that's spot on. And I think it just says all three of these charts, and these are not charts that I've cherry picked or analysis I've cherry picked. This is stuff we've looked at for many months now. And the dollar, most of all, has been a huge tailwind and support to the commodity markets. Maybe not so much for the grain markets until now, but it is starting to catch up. And so, yeah, you're right. 5-6-month new highs in the dollar index. I'm starting to see the Brazilian currency weaken, the Chinese currency weaken. Not what I want to see. Russian ruble currency starting to weaken. Not what I want to see when it comes to the oil seeds and wheat. So again, 3 for 3 now. We've got some watch lists to be putting together as far as how hard can this market run. And I guess I'll tie it together this way, Jesse. We've got a USDA report coming. We're going to get fresh supply demand fundamentals. We're going to find out what they expect China to buy, how much it moves the needle in terms of the export side. We're also going to get fresh yield numbers and put that situation to bed for now. It's probably going to come back in January and have to be looked at again, I would guess. But the November WASDE numbers, I think I'm going to go into them expecting that the corn and beans especially will try and find as much support and as much of a rally potential as possible in case demand goes up and yields go down, and kind of price that in. The numbers I'm looking at right now is, and keep in mind in the September report, we had a 300 million bushel carryover in beans, 2.1 billion in the corn. I'm looking at maybe going down to a 200 million carryover in beans, 1.75 carryover in corn. That would get me to 460, 470 December corn, and a 200 million from a 300 million bushel carryover in beans on a yield decline would get me closer to that 1145, 1160, 65 area as far as what I'm projecting. Those are just projections, but they're at least they're target prices for when clients call in and say, okay, where's our next sale at? I can say, if we stay strong in the bean market against Brazil, dollar stays tame, wheat and crude work together, these are the levels I'm going to try and go after to make more hedges.
And real quick on this corn market too, just to add in here, corn has felt like it's the third leg, it's the follower here. The price action, you look at some of the carry, there's still a decent amount of carry in this corn market. I mean, corn's just kind of chug along here in this window, it seems, Mike.
I agree. It looks a lot different than it did the past 3 or 4 weeks or even 3 or 4 months. The spreads have softened. As you say, the carry is still pretty firm. I will be interested to see what we do by the end of this week. We've taken out the last week's highs by a long shot in wheat and in soybeans, still 2 cents, roughly 2 cents away from that 437 high in corn on the week last week. I really think we should take that out, given the fact that we've seen on the ethanol numbers for the week a record high number, 1.123 million barrels a day. That's a record high going back to all the way back in my charts past 2010. So I think that the corn should pick it up here. If it doesn't, that also is kind of an indicator that maybe the market's getting a little bit tired for now.
We're having a conversation today with Mike Zuzolo from Global Commodity Analytics. Mike, let's go over to that livestock sector and talk through the cattle. And again, it was a rough day. Futures-wise on Wednesday, limit losses in feeder cattle, and the fat cattle even joined in as well. Let's talk about these markets here a little bit, because I think we touched on this last week, how even with all the volatility in futures, you're now starting to get that disconnect again with the cash market, which is still holding somewhat firm, at least what I've seen. Now, that might change in the next several days. We don't know, but what stock do you take here with the cattle moves that we've seen now to start, the month of November? More volatility here, I guess, Mike.
Yeah, this is where I think the 2014, 2015 time period comes into play for me. And you can agree or disagree with me on that time period, but that's my gauge. And I want to be very open and frank about that and let everybody know up front that's where I'm at. Is I think there's similarities are there strong enough that we want to pay attention to what happened in 14 and 15. And in Nov Dec Jan, you can see in the 14-15 market cycle, in the Nov Dec Jan time period, 3 straight months lower. The fat cattle here lost about 13.5% from their high to their January low. We based in January, then went up or had 2 positive months and then continued on down for several more months. Again, I think this pattern makes sense, especially if we don't have a bad calf crop season, in other words, wintertime, and we do open that border up. To answer your question more directly, Jesse, I think that the market clearly is saying in the futures, the border's opening up or some kind of supply is coming back into this market, whether it's Brazil, meat coming, beef coming, whether it's Mexico opens up. I think it's more likely that the science is the veterinary science, the ability to control screwworm with some of these new emergency approved shots and vaccinations may be what's coming down the line. Maybe the trade's ahead of the curve. But in my opinion, by taking out the September lows this week of around 334 in the feeders and 226 in the fat cattle, they are technically opening up the downside. They are creating a new wave of selling pressure and momentum to the downside. And you just can't stand in the way of that because of the heights that we've gotten to. And that's what this channel chart that I call it is really showing us. Monthly fat cattle, you see how they went parabolic. They went above the channel. Now we're coming back into the channel and we're at the halfway point. We really need to pull it together here. And I would even say by the end of this week, close back up above those September lows. Because if we don't, then we're going to be looking most likely, in my opinion, of testing the channel support. And that's still another $10 to $12 lower. And what that gets you then is if we're like 14 and 15, the futures price ends up weighing on the cash price. Right now, the cash price is fighting it. But how long can the cash market withstand this? And that's my biggest concern.
On the feeder side, let's look at the monthly chart here, and you have some cycles to take a look at as well. And, I mentioned this, feeders kind of broke hard to the downside first on Wednesday, and then the fats kind of followed. A lot of the volatility, I'd say more of the volatility has been in feeders here with all the different news and things swirling around this market, Mike.
Yeah, and you've got those 3 trend lines, and those are typically, I like these trend line type analyses because they tend to work pretty well. If you go parabolic where the yellow trend line was, you've got the midpoint trend line in white, and then you've got the rock solid kind of Custer line of support that you don't want to go below or you lose the whole uptrend. And that's the purple line, and that's all the way down around 300 or 305. And you're right, that 5-year cycle, 5.5-year cycle that we're looking at excuse me, 7-year cycle, 3.5, 4 up, 3.5, 4 down. This is one of those cycles where I pay attention to it and I respect it. And along top of this chart is suggesting a sell signal on the stochastics, the first sell signal of 2025. And so I really want to pay attention to it. So for the feeders, my mindset is pretty simple. I don't want to fight the technicals. We've had an unbelievable run. I think this is a correction, but it doesn't matter when it's all said and done because a correction is still worth hedging. And while the last big break to the downside didn't surprise me, and I could kind of see it coming because of the 2014, 2015 cycle analysis, Jesse, this one I didn't see coming, and that actually makes me more nervous that it's got more down to it if we don't change course really, really quickly. So I'm ramping up again with clients saying, again, September lows need to be recouped and put these charts back on a track where the downside isn't like a hole in terms of how this market looks. Where do you have support on this chart until you get to that purple line, in other words?
Well, I know as well, we saw the hogs a little bit mixed on the day Wednesday. I got one more chart to pull up that you sent me, and I know you and I don't really talk ever before we do the show each week. And so I'm curious your thoughts on this, and I'll also preface, by saying this as well as we think about the SNAP conversation and food stamps. I know neither one of us is going to get into a political discourse here. I don't care who's at fault or what, but I care that there are people who are facing hunger issues in this country. And I'm curious your thoughts on this, how that, everything going on surrounding SNAP, how could this play into our protein markets, our meat markets, things of that nature? I'm thinking that's where you want to go with this. I'm curious your thoughts, Mike.
That's exactly where I'm headed, Jesse. We talked about the idea that President Trump's policy with beef is similar to eggs and that he wanted to take prices down. Now we've got a whole nother layer of that. And when I did, it's very hard to find good research on SNAP because you've got pre-pandemic research that's very available, very little post-pandemic research. And the reason that's important is because the food at home numbers have gone dramatically higher, while restaurant, especially sit-in or fast casual, has really gone down. And so it's really important to realize that there's a lot of money on the line here. And when I looked at this graph and I saw that ground beef was ranked third in terms of the amount purchased with your SNAP benefits, and then I look at McDonald's sales that came out this morning on Wednesday morning, up 2.4% for the third quarter year over year, but lower income sales down near double digits, higher income sales up double digits. Almost the same thing that Chipotle reported. We're getting this terrible separation in our consumption of food at this point. And I'm just wondering if it's not about the supply in Mexico's cattle, whether it could be that the livestock futures market is breaking in anticipation of this hurting the demand side as long as it continues to go on. So what the answer to that is, if we end the shutdown and SNAP gets rolling again, watch for a big, quote, snap back in the cattle prices. And if we get that, then we feel like we're probably on the right track at that point. So that's the whole point of the analysis that I do, independent analysis I do here internally.
And it's an excellent thing to think about. It's something that I hadn't really considered, and I think a lot of folks haven't considered here, how this could all tie into the cattle markets and our markets in general. So great stuff as always. Mike, final thoughts for you as we close out the show today. Anything you would mention or reiterate to folks?
I'd ask people to take a look at our analysis and research and subscribe or become a client as you get ready for 2026 and see if we can't help by the way we look at these markets a little bit differently. So please go to globalcomresearch.com, sign up for a 2-week free trial, and take a look at our product services brochure. They're online. It has prices on it as well.
Of course, you always remember that risk of trading futures and or options can be substantial. globalcomresearch.com. Mike Zuzolo, Global Commodity Analytics. Good to talk with you again this week, sir. Have a great one. We'll talk to you again next week.
Thanks, Jesse. Appreciate you having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.